Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, July 9th, 2015. Three things to talk about. Let's begin with the major financial indices here in the U.S. Looking at things on a year-to-date basis, the Dow, the S&P, the bond indices, gold and oil are all down year-to-date. Now, nothing's down real big, but everything's just in the red on a year-to-date basis. Now, this is unusual because during the last 3 years, we've had rising markets, and virtually every quarter, something has had a positive rate of return. But we're in this period of time where stocks are correcting and interest rates are rising, and also the commodity markets are not performing very well. This brings me to point number 2, looking at the S&P 500 price chart here. You can see that the price of the S&P has clearly broken the 200-day average for 2 days now. This is a trend break in our mind. That doesn't necessarily mean we're going to begin a new bear market. At this point in time, I'm looking at this as a correction in an ongoing bull market, but we've clearly broken trend. Now, this brings me to my third point and most important point of today's presentation. It is now time to start to put together a buy list for the cash that you would have in your portfolio. And if you have a lot of exposure to bonds, this could be a good time to think about shifting some of that bond exposure into dividend equities or alternative equities. But the correction is underway in stocks, and I'm noticing by some of the indices that I follow, investors are very pessimistic about the stock market. We're going to get some sort of resolution with Greece this next week. If it's a negative resolution, it could send markets lower. But I'm expecting lower prices ahead, but not a new bear market. And therefore, you want to put together things that you want to buy on weakness for the next leg up. This is Doug Fabian. Thanks so much for tuning in today.